This is Daybreak Asia. We're counting down to Asia's major market opens. And Paul, just a few moments out from the start of trade in Japan and South Korea, the big market theme today is most certainly the Fed holding rates steady, but really Powell as well rebuffing any talk of a rate cut by March.
Yeah, that's right. That seems to be off the table, and the market reacted fairly profoundly to that. We saw the S&P lose a lot of ground after he made those remarks. And here in Australia, we've been backing away from the record high that we set on Wednesday. The ASX currently off by 1%. But yeah, suffice to say, we're probably going to have a risk-off day around the Asia-Pacific today, Bill.
Yeah, that's right. And also just some data to note, because we are just getting the Korea trade numbers dropping for the month of January. So we saw here that exports continued to gain for a fourth straight month. So up 18% on the year. That was slightly higher than what economists had been seeing, and a strong rebound from the month prior as well. This is another signal of this improving outlook for semiconductors, because the exports numbers really underpinned by strong outbound shipments of that equipment. So exports, as we say, rising 18% on the year. Imports continuing to be in contractionary territory. It is down at 7.8%. That is a little bit less than the prior month's 10.8% drop. How that feeds into the trade surplus, that did narrow to around $300 million. That was down from $4.5 billion in December. So these numbers to us really also the rapid reflection, or rapid expansion rather, in that headline figure for exports. There were 2.5 more working days during this month than last year as well. So it is still good numbers, but perhaps a little bit less impressive when you put it into that context. We've also, as I said, Korea really the trade bellwether here. So those exports, once a good signal for the health of the semiconductor market. Let's shift now to what we're seeing in Japan at the start of trade, because you said it's a really that focus on the Fed holding rates steady, also signaling that yes, there's that openness to easing in the months ahead, but March really not the most likely case here. And so we did see that big pullback in US stocks. Actually, the worst day we've seen for US stocks on a Fed day going back to March of last year, but you do have that weakness here at this point. We're also just keeping an eye on trading for Nomura, not online just yet, that bid-ask spread not matching. But the big news today from Nomura is that it's sticking with a turnaround plan, rewarding investors, and it has announced a buyback of up to 100 billion yen. That's $677 million. So that's just one of the key takeaways from its earnings poll.
Yeah, well, let's take a look at how we're doing here in Australia. We did, of course, set a record on Wednesday. Well, that was short-lived. We've got the ASX off by about 1% right now, off the back of those remarks from the Fed Chair, Jay Powell. Every sector on the index currently in negative territory. We've got the Aussie dollar losing a little bit of ground as well. It's currently 65.63 against the greenback. Saw yields slip on the Aussie 10-year also, but yields fell pretty much across the curve. Crude prices, though, remaining steady, 75.90 a barrel, as we still await to see what action the US takes in regards that airstrike on its troops in Jordan, which killed 3, left 25 injured earlier in the week. Now, I mentioned treasuries there. Let's take a look at how we're trading in that space in the Japan session. We did see yields falling across the curve after those remarks from Jay Powell, which appeared to take the March the idea of easing in March pretty much off the table. The yield on the 10-year right now, 393.12 in the Tokyo session. So yeah, Jay Powell appearing to rule out March in terms of rate cuts, which does beg the question, what is the Fed waiting to see? Well, let's hear from the chair.
What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are, in fact, on a path, sustainable path down to 2% inflation?
first bring in Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management, who joins us from our Singapore studio this morning. So, Hartmut, the market's perhaps a little bit surprised or not liking what we heard from Powell after that meeting, but was there anything that sort of shocked you out of it?
Not so much, because you have to also see the economy is actually not weak enough for sort of emergency rate cuts, as I would put it. Yes, I mean, the rate cuts are coming, but we thought all along there was never that much pressing evidence that you need to do it right away or say in March already. So yeah, I think that the case that we have is 4 cuts this year, starting probably in May, because then really what comes inside is that the Fed's target, so the 2% more or less, probably on their main proxies get hit, so you can preemptively start to take it down. Yeah, again, we would have thought all along March is a bit too optimistic in that sense.
And so how are you, based on those expectations you just discussed there for the Fed timeline, how are you positioning in Asian FX and fixed income?
Yeah, for Asia, so presuming that the rate path, the direction of travel is in any case clear, right? So even if you take some of the market estimates out, what it means for Asia is, of course, everybody around the world, including in Asia, also is very much hoping that they can also cut. So when the Fed takes the lead, that will be positive for some of the Asian markets. My sense would be like the cyclicals, like Taiwan, like a Korea, maybe they could come early, maybe a bit of easing in Singapore as well, possibly in the second quarter. Other ones that are a bit hotter yet, like India, they probably have to wait a bit longer. Possibly the most positive when it happens is China, because they also always need to, despite the easing efforts, they always need to look a bit at the currency as well. So of course, when the Fed matches, that makes it a bit easier for them to also ease. So I wouldn't be surprised if the Chinese markets also takes a cue from that.
With the Fed appearing to rule out, or at least say that March is very unlikely for easing, does this open the door really wide for the BOJ to end negative rates in March? What are your expectations there? Have they changed?
We still think probably more sort of tightening in that sense, if you want to call it that. Maybe only in April, of course, with the earthquake, what happened there caused a bit of weakness. So we think it's rather delayed. Yeah, and we see it a bit as independent, right? So whether the Fed would have cut in March or not, we think it is due. The data, especially inflation data in Japan, is evident enough, and then you have also the Shinto rounds. So there should be enough evidence that you can actually at least tighten a little bit from these ultra-loose policies. So almost a bit regardless, I would say April is probably the month where we see things happen in Japan.
And we've seen the yen weaken a little after strengthening initially during the Fed's press conference. What's your price target for the yen for the coming months?
Yeah, I think ultimately it can go to, say, 140 or so. That may not sound like a lot. I mean, it's a significant strengthening. Why is it not more than that? Because we need to see also around the world, nobody really wants to go a lot harder. Most of the central banks also want to ease as well, just as the Fed does. So they're waiting maybe for the Fed, but then everybody cuts. It's not only the Fed that's cutting, everybody cuts a bit. So therefore we see maybe on most of the G10 currencies, with some exceptions, but say on average 2 to 3% weakening of the US dollar against these other currencies. So in that sense, the yen already stands out and sticks out when we have a 140 price target.
Just getting some lines on the Bloomberg terminal here. I'll come back to you in a moment, Hartman, from Goldman economists pushing back now on their forecast for a first Fed rate cut, reversing away from March as well. Now looking at May as the possibility for the first round of easing from the Fed. So yeah, we're going to expect to see a fair bit of repricing around Fed expectations in terms of easing in the coming few hours, I imagine. But before we leave you, Hartman, I just want to get your call on China as well. You mentioned it a moment ago. Do you feel like there's a growing disconnect between what policymakers in China are saying and what the market wants to hear? And how is this going to impact assets in China in the coming weeks?
Yeah. No, certainly I think it's fair. Many investors would like to see a faster pace. Then again, I can also to some extent understand why that China doesn't necessarily open the floodgates for all sorts of leverage. That it has been slow coming, but it is coming. I think an interesting point will be in March when we have the party congress and everything. Then to see whether we get or what type of growth target potentially we get, and that would also send us a signal maybe what's possible for China. But anyway, I think the bottom line is, yes, we have nonetheless seen a bit of an acceleration in terms of measures, I would say. Whether the market thinks it's fast enough or not is a different question. But we do see, in my view, momentum into a sort of a bit more stimulative or more supportive, I should say, policy making nonetheless.
All right, that was Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. We are just 10 minutes into the session so far for trading in Japan and Korea today. Taking a look at some of the big movers so far. Well, Nomura, you can see, is really standing out there. We had its earnings out yesterday after the bell, and the key takeaway really was for investors that they announced this $100 billion yen share buyback, rather. That's $677 million US dollars. So that's really investors liking that one. But also they had a strong showing in fixed income trading, and that helped lift revenue in global markets. Bit of an uptick as well coming through in deal making and its mainstay retail business. So all of these factors really helped to boost earnings. This is Japan's biggest brokerage. Now, also tracking for earnings, there's Sumitomo Mitsui. You can see they're just a little bit weaker this morning, but this is the first of Japan's mega banks that are due to start reporting, so it's up on Thursday. We're expecting a decline in profits rather in the latest quarter, but still the results should show solid progress toward a record annual net income. So likely to be hurt from losses stemming from the sale of its US freight car leasing business. That is the state of play for some of the movers here in Japan. As I said, that earnings focus very much there. Let's switch though, because we're also keeping an eye on Boeing suppliers in Asia, because we did see the plane maker actually posting fourth quarter earnings, cash flow and revenue that all surpassed analyst expectations. It's important to note from Boeing itself, the company really downplayed these financial results, and the focus was more on the safety issues at the company and how they plan to resolve those. But we did see Boeing shares gaining on Wall Street, up more than 5%. And so we are just keeping an eye on some of its supplies here in the Asian region. A little bit mixed so far, the numbers. And finally, also earnings related, we had Adidas and H&M in Europe, both of those really disappointing investors. So we saw H&M down 12% because it reported fourth quarter operating profit that missed estimates. And then Adidas ADRs as well sinking nearly 10%, and that's after it forecast operating profit for 2024 of about 500 million euros, and that was less than half of what analysts had been expecting from the company. So a big drop there for Adidas. Just taking a look at some apparel makers here. Again, it is that weakness. But Paul, I think generally in the session so far, this is really the name of the game, given that investors aren't really liking this pushback from Powell on expectations for a rate cut by March. And so we are seeing the broader stocks index down around 0.5% today.
All right, still to come on Daybreak Asia. Singtel partnering with NVIDIA to make AI adoption more accessible in Singapore and across Southeast Asia. The CEO of Digital Infraco at Singtel is going to tell us more about that deal coming up later this hour. First, though, Qualcomm shares slipping in late trading as the chip maker flags only a modest recovery this year as inventories slowly clear. We'll have details next. This is Bloomberg. Qualcomm shares fell in extended trading after it warned some of its customers are still working through gluts of chip inventory. That overshadowed a solid earnings report. Bloomberg Intelligence says the results could suggest the start of a turnaround in smartphone demand. Senior semiconductor analyst Kunjun Sabani joins us now. So Kunjun, do tell us more about what this means for the smartphone market.
the company delivered a beat in its fiscal 1Q and an inline guidance for 2Q. When we combine that with the earnings commentary from Skyworks and Qorvo, it suggests that the recovery in the smartphone market, especially the Android market in China, is slowly starting. While this is a good sign, I don't think we are completely out of the woodworks yet.
And so what about the relationship that I have with key customers like Apple and Samsung?
Yeah, so they announced agreement extensions with both the customers. With Apple, it was a licensing extension, and with Samsung, it was just chip agreement. While these agreements don't signal any upside from the current run rate, I think it's still a positive sign, as it could ease concerns or unpredictability on two of its largest customers, at least for the next few years.
And what did we hear about the trajectory for the automotive segments?
Yeah, so, the unique thing for Qualcomm, while most other auto semi companies are giving weak guidance and are seeing weakness in demand, the area that Qualcomm plays in, which is for the new software-defined vehicles in the infotainment and the digital cockpit, these are the areas where, as new cars launch, automakers are still increasing the silicon content because it's more profitable for them. So this is where, despite the weakness in the overall industry, Qualcomm is still seeing healthy growth and is expected to continue seeing growth in this one end segment for them.
All right, Qualcomm shares just still a little bit weaker in after hours, but that was our Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani there. Let's turn to another mover in the intraday session on Wall Street, because Boeing shares jumped as fourth quarter revenue and cash flow surpassed expectations. But the earnings took a backseat to the MAX crisis instead. During the analyst call, CEO Dave Calhoun publicly admitted blame for the Alaska Air 737 panel blowout as aviation regulators step up scrutiny of its manufacturing systems.
We caused the problem, and we understand that. We instituted additional quality controls and inspections at Boeing and at our supplier. We issued bulletins to suppliers to strengthen the focus on conformance and reducing the risks of quality escapes.
For more, let's bring in our global business reporter, Angus Whitley. Angus, I'm interested, did that sort of focus on the safety issues, the MAX issue, taking more prominence in the numbers, did that take you by surprise at all?
We're certainly in line with what CEO Dave Calhoun has outlined since the accident, the Alaska Airlines, almost catastrophic blowout in January. And you're right, the fourth quarter results, as good as they were, they did take a back seat to Calhoun's guidance and how this company moves forward here, with the FAA, the Federal Aviation Administration, taking a much closer look at Boeing's manufacturing process and that of its suppliers as well. And that was borne out in the fact that Boeing didn't give any earnings forecasts, as it usually does at this time of the year, with its production plans still uncertain. And although Dave Calhoun did admit that Boeing is the cause of the problem, at least for that accident, and ultimate responsibility lies with Boeing, it's the FAA that needs to be satisfied that the manufacturing processes have improved before it allows Boeing to lift its production. And that's key, obviously, to Boeing's medium-term plans to improve cash flow.
So how long is this going to take to address these problems, restore Boeing's reputation and reassure investors?
Well, Dave Calhoun is not going to preempt the FAA on that. And he stressed that today, that certification will take as long as it requires for the 737 MAX 7, which is yet to be certified. So it's really a case of how long does it take the NTSB and other investigation specialists to decide the outcome of the Alaska Airlines incident, to decide, what more needs to be done there, and then, of course, the outcome of the FAA's deeper scrutiny of the broader manufacturing process at Boeing. Dave Calhoun, in the longer term, would like to lift the 737 MAX output, narrow-body output, to 50 aircraft a month. At the moment, it's capped to less than 40.
All right, global business reporter Angus Whitley there. All right, we're going to have some more on the outlook for the chip sector with NVIDIA CEO Jensen Huang. He's going to speak exclusively with Bloomberg Technologies' Ed Ludlow. You can catch that interview on Daybreak Australia tomorrow. Well, let's get the latest corporate stories today. New York Community Bancorp plunged by a record, with investors worried it's now a signifier of wider risks in the commercial real estate industry. The bank's provision for loan losses surged to $552 million last quarter. That was more than 10 times analyst estimates. The bank, which acquired part of Signature Bank last year, has also stockpiled cash as it contends with lending risks. Moody's has placed NYCB on negative watch and may cut its rating to junk. Customers and creditors of bankrupt crypto exchange FTX will likely get back all of their money on proving their losses. And that's at least what the company has told the judge overseeing the insolvency case. The team overseeing the firm has also dropped an effort to restart or sell the FTX crypto exchange after concluding that it would cost too much. The leaders of top social media platforms have faced a barrage of criticism from US lawmakers over their online child safety failures. The CEOs of firms, including Meta and X, testified before a Senate committee on Wednesday and were pressed to support new legislations to impose controls.
Social media companies, as they are currently designed and operate, are dangerous products. Mr. Zuckerberg, you and the companies before us, I know you don't mean it to be so, but you have blood on your hands. You have a product. You have a product that's killing people. These companies must be reined in, or the worst is yet to come.
And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers go to DayBgo on their terminals. It's also available on mobile in the Bloomberg Anywhere app. And you can customize your settings so you're only getting news on the industries and the assets that you care about. This is Bloomberg.
What do we want to see? We want to see more good data. It's looking for greater confidence that inflation is moving sustainably down to 2%. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting. We're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. We're not declaring victory at all at this point. We think we have a ways to go.
That was the Fed Chair Jay Powell and the central bank's rate cut view, and certainly that pushback on expectations for March poured pretty much cold water over the US stock session. We had the worst Fed day for US stocks going back to March of last year. How that's being felt in the European futures that have just come online, again, setting up for some weakness here. We did see European stocks actually ending the day steady on Wednesday. Some strong earnings coming out, but still it was that picture of uncertainty around what Jay Powell was going to be doing. So that's one watch for us. Of course, other central banks in focus, and the Bank of England is a key one. It's due to deliver its decision Thursday as well. The expectation by economists that we surveyed will be that the central bank leaves its key lending rate at a 16-year high, so that's at 5.25%. The decision is announced at 12 p.m. London time. Also expecting a better outlook for the UK economy and its forecasting for this year, and also a reduction in its expectations for inflation over the course of 2024. We'll have more ahead on Daybreak Asia. This is Bloomberg.
The federal funds futures contracts went from pricing in, more than 50% probability of a rate cut in March to significantly less. So I think that was the big surprise.
I think that's the story. Is it May? Is it June? It's not March. It's pushing back because they don't want to rush into a cutting cycle. The Fed has won the battle on inflation.
The Fed is now thinking that March is going to be too soon for them to see that good evidence that inflation is showing good progress, besides just the goods story that we're seeing, but also shifting to services. And it's buying them time.
I think we could expect quantitative tightening, tapering to happen sometime, probably around the first half of this year. If the inflation continues along the same course for a few more months, then the Federal Reserve is certainly going to start to cut rates. They're just not absolutely confident that that's where we're going to be 3 or 4 months from now.
Some of our guests there on the outlook for the Fed after Jay Powell made it clear that a March rate cut is unlikely, and we saw markets selling off the back of those remarks in the US, and that's translated into most markets in the Asia Pacific as well. Here in Australia, the ASX really walking back pretty quickly from the record that we set on Wednesday, the index off 1.8%. We did get a bit of data out of Australia just now. Building approvals for the month of December falling pretty heavily, contraction of 9.5%. The market was looking for a modest expansion there, so a big miss there for building approvals. We've also just had business confidence numbers for the fourth quarter as well. The contraction there also down to -6, so firmly in negative territory. Business confidence declining in most industries, very weak at retail, -20 points. And only transport and utilities in positive territory there. Other markets around the region, we're seeing a bit of weakness in Japan as well. The Nikkei off by 0.2%. One exception there, though, Korea doing pretty well. And we saw chip exports to China from Korea rising by more than 50%. And that's the biggest spike we've seen in 73 months, Bell.
Yeah, well, actually, picking up on that point, Paul, it's interesting when you take a look at the PMI numbers that have just come out, because it's actually Korea that's showing one of the best increases over the course of January in these surveys. So you can see here up to 51.2, so moving into expansionary territory, out of contractionary territory when it had been at 49.9. So it's just another signal to us, again, as you say, that we are starting to see perhaps the bottom in the chip-making industry, those better chip exporting numbers that are coming out of the country. And again, a chip-making peer in the region, that's Taiwan. You can see there one of the other better performers out of these PMI numbers coming in at 48.8, up from 47.1 from the month prior. Otherwise, the key sort of takeaways we're seeing in those numbers is it is broadly moving high here, the better numbers that have coming in out of these surveys. There was only one that actually deteriorated from the month prior, and that was the Philippines, coming down to 50.9 from 51.5, and Japan as well, staying flat here, 48 from the month prior. But broadly, these are better numbers coming out of the PMI readings. These are the private surveys, Paul.
Well, Singtel is launching a new brand to develop AI data centers. One of its initiatives includes a collaboration with NVIDIA to make AI adoption more accessible in Singapore and across Asia. Joining us now is Bill Chang, CEO of Singtel's Digital Infra Co. Bill, thanks for joining us. This is obviously very exciting news for you, but of course, there's a lot of demand for NVIDIA GPU chips. When do you expect you're going to be able to access these and get this project up and running?
Well, we're looking at sometime between Q2 and Q3 this year as we sort out the shipments with NVIDIA.
So once you get going, what sort of demand do you anticipate for the AI data center, and how's this going to impact Singtel's bottom line?
Well, I think if you look at what's happening with Singapore announcing the national AI strategy last month, and around the world where AI adoption is accelerating. And if you think about where these GPUs are really the core foundation of AI, they are firstly scarce. Secondly, they also consume a lot of energy and need, special environments to host them. So if you think about where this drives, it's firstly, to have data centers that are sustainable, that addresses the carbon footprint issue, And at the same time, specially built, for the AI environment, it's going to be key to allow customers to host this at scale, with players like us to be able to then connect with all the networks, whether it's fixed or 5G networks, to allow them to support whatever they may have on-prem with their GPUs, or may not have even some, given that some of these are small companies, mid-sized companies, who probably find hard to access GPUs. So this service would really, drive the demand for one on our data center, our Nexera data center, which is green, sustainable, hyper-connected AI DCs. The sort of analysts are saying that it's just the digitalization trend that will drive 20% growth. But given the AI revolution that's happening now, that growth will essentially double, 40 to 50%. So that's going to create a lot of demand for the data centers itself, but specially built, purpose-built data centers that are, sustainable and, built for AI environments with very high power density, rack density. And then at the GPU level, it's where, we're launching the GPU cluster. Again, that's to address the scarcity of those GPUs and to make that available so that we can democratize AI. And beyond that, we've also got platforms that we've patented and built and allows customers like Paragon to allow them to orchestrate between various types of AI workloads, whether it's NVIDIA or they may get it from cloud players. They have the opportunity to operate in a hybrid AI environment, which is really what we want to empower our customers to. And we believe, given what NVIDIA's projections and, a number of the reports, this is a trend that is in the early cycle of the whole sort of AI adoption trend, and that's going to be growth that's coming. And at this stage, we've just taken a very market demand-driven kind of view to stage this as we expand and bring those AI DCs in, out to the market in phases.
I just want to cycle back to a point you made a bit earlier there about how AI data centers are just so power hungry. Can you give us a little bit more detail about how you're going to address the electricity needs, keep it sustainable, keep it affordable?
Thank you, Paul. And if you think about what we just announced, the Nexera brand yesterday, there are a few sort of key vectors we are attacking this issue to balance the duality of enabling powerful technologies like AI, but to do it sustainably and responsibly. Now, let me talk about, and that's why the positioning of what we have, green, sustainable, hyper-connected, AI-ready DCs. And in the green part, we are really working with energy companies, the leading ones in this region, Sembcorp in Singapore, Tenaga in Malaysia, and in Indonesia, Medco, Gulf Energy in Thailand. And essentially, these companies are producing green energy and transitioning, and we are really getting our DC assets to work with them in the region and in Singapore to harvest as much of these green electrons as we can to power those DCs and to reduce the carbon footprint. With that, we aim to be net operational, net zero carbon emissions by 2028. So that's, a very aggressive timeline. That's, couple of years away. And the other area that we're addressing is sustainability. We're working with global leaders and also promising local enterprises to bring about new generation of cooling technologies that is very important in AI DCs, given the kind of heat density that you're generating from powerful AI GPUs. And just to give you a sense, AI DCs are to run at close to 100 kilowatt per rack, and that's what we have in our new generation DCs. The current operating data centers are mostly 8 to 10 kilowatt, 12 kilowatt per rack. So we're talking about 10 times more power density. Yeah.
Wondering about your expansion plans around Southeast Asia. Do you think these economies have the infrastructure that is ready really to take advantage of what you're offering?
Absolutely. We are staging the entry into the countries and obviously working with our customers closely in where they're accessing the where the countries where the demand are, and at the same time working with energy companies to prepare. A large part of that is actually availability of energy and green energy as we discussed, and looking at Indonesia, looking at Thailand. Currently, our assets are expanding in the region in those countries, and obviously in Singapore. And so, and we are planning this out with the entire ecosystem to stage this entry. And, in the next 2 years, we're going to bring on stream these AI DCs into the markets here. And meanwhile, in the current format, we're really upgrading our current facilities to be able to host intensive AI workloads so that it's not just staging it out for 2 years when those new DCs come, but the existing ones, we are basically retrofitting some of this to allow for innovations to take place, test bits, and to allow us to to cater to the market demands.
All right, Bill Chang, that was the CEO of Digital InfraCo at Singtel, and a big announcement or a tie-up with NVIDIA. And we're actually going to get more from NVIDIA later today because we're going to be speaking with the CEO, Jensen Huang. He is joining us exclusively with Bloomberg Technologies' Ed Ludlow. So you can catch that interview on Daybreak Australia tomorrow. This is Bloomberg.
All right, just want to get you across an alert on the Bloomberg terminal. Relates to Elon Musk's online poll on Twitter asking whether or not the company Tesla should move following the difficulties with his pay issues in Delaware, asking if Tesla should move and reincorporate in Tesla. It was pretty overwhelming in the end, 87% voting that Tesla incorporate and move from Delaware to Texas. So that is according to a poll conducted by Musk on Twitter. 87.1% of X users voting in favor of Tesla changing its state of incorporation to Texas. Annabelle.
Well, Paul, big breaking news out early this morning. Sources telling Bloomberg that Amer Sports has raised $1.3 billion in a US IPO that was priced below a marketed range. For more, let's bring in Bloomberg's equity capital markets reporter, Felipe Pacheco. And Felipe, yeah, maybe a disappointing result, but it's still a US or a Chinese company that's choosing to pursue a US listing.
That's right. Well, I mean, there are so many different elements that we can read out of this IPO. And definitely the pricing is one of them. The news were broken by our colleagues in New York earlier today. It was late U.S. hours. $13 per share. That's about 20% below the bottom of the expected market range. So that means that, well, there was pressure to actually price these shares at this point. We know that the IPO itself was delayed. The pricing was delayed by 1 day. People were expecting it earlier this week. So I think that, yes, it's good to see it priced. It's a big deal. It's the biggest since Birkenstock late last year around September. So it's nice to see that a big deal of this size is actually able to come to market. I think that the next step is what is this stock going to do tomorrow, what the performance is going to be like. It will really give us an indication regarding sentiment and also towards appetite for shares of a company that is at the end of the day backed by the Chinese.
Yeah, so tell us a bit more about some of the company's backers that are taking part in this IPO.
But we have several interesting names, and of course one of them is Anta Sports, the big Chinese apparel company that actually was taking the lead in a consortium that bought a big stake of Amer Sports back in 2019. But that's not the only interesting name that we have actually taking part of this IPO as well. We have, for example, the investment company owned by the billionaire that is the backer of Lululemon Athletica. It's a quite important name. And also we have Tencent. All of them, like this group of investors, they took part of the IPO and they actually bought more shares than they were initially expecting in the deal, basically demonstrating that they were backing the whole offering and then maybe they needed to step up and buy more than they wish.
It's going to send a really important signal to the market, no matter which way it goes tomorrow with the start of trade. So how could it end up impacting the pipeline for other IPOs or listings?
That's a very good point. No matter what happens tomorrow, people will be paying attention to it because a pop would be great news for all of the companies trying to list in the U.S. market. It doesn't matter if they are Chinese, if they're related to China or not. And then, of course, we haven't had deals larger than $200 million by Chinese companies in New York for a while. Like since dating 2021, there hasn't been an IPO of significant size by a Chinese name in the U.S. If this goes well, of course, there could open room for more companies to reconsider, to work on their papers, to talk to banks, and also, of course, there's Shein, and that's a big name. We know that's a completely different case, but at the same time, it's on the radar. Regulators in China on top of it, so there's a lot of different elements to this puzzle. Definitely an interesting deal to watch.
All right, Bloomberg's equity capital markets reporter Felipe Pacheco there. We're going to hear from the Amasport CEO, James Zheng, from the New York Stock Exchange. That is coming up later on Bloomberg TV at the times that you see there on your screen. Still to come, the slump in China's home sales persists even after China Evergrande's liquidation. We've got more details on that next. This is Bloomberg. The sharp slowdown in China's home sales dragged on in January, even after policymakers stepped up efforts to arrest the slump. Well, let's get more details from our Greater China Senior Executive Editor, John Liu in Beijing. So, John, the value of new home sales just keeps on falling. When are we going to see a floor put under prices?
Well, that's the question everybody's trying to answer right now, Paul. The sales for the 100 biggest property developers in China in January, that number fell by about 34% from a year earlier. It was down about 48% from December, so a fairly significant drop. The problem, I think, for the developers right now is who's coming into the market when we have falling home prices. There is a real reluctance to buy when people think that if I wait a little longer, I could get it for cheaper. And so that is the problem people are trying to deal with. It's the problem the government is trying to address, trying to make sure that those developers are getting the financing they need from banks in lieu of the fact that they are not having a very hard time selling the homes that they have in stock.
But sometimes it's also difficult to sell because consumers don't want to buy them. So we've seen a lot of measures announced toward the end of last year and also this year just to try and bring buyers back into the market. Nothing seems to be working so far. Could we expect more extreme measures, or do you think it's just a bit of more time is needed?
So I think that big 48% drop that we saw between from January versus December, I think that was partly because we did see the big cities, Beijing, Shanghai, loosening some of the restrictions on home buying. In the month of December, there was a bit of a pickup in December. That has tapered off. That is why we're seeing this number that we had in January. I do expect, I think there's a general expectation in the market that China will do more. Cities like Beijing, Shanghai, Guangzhou, Shenzhen, there are still relatively high barriers to purchases. People are largely allowed to only buy one home per family. We are expecting those to be gradually rolled back.
All right, that was our Greater China Senior Executive Editor, John Liu in Beijing there. Let's shift now and talk about how markets are faring in China, because we have seen that stock sell-off really deepening, and it is that pessimism around the housing crisis in China that's weighing on it. So let's discuss with our Asia Equities reporter, Charlotte Yang, joining us. And Charlotte, yeah, I mean, it's still this pessimism around the property sector that's just playing into stock prices so much. Do you see that continuing the trend?
Yeah, it's not looking too good for today's trading. You know, we got all of that negative data point that just came out about China's January sales and the property sales, you know, took a further steep fall from last month. And also in Hong Kong, you're seeing that underwater mortgage actually surged to 2-decade high, you know, in the past quarter. All of this, I think it's sending, for onshore, I think it's showing investors that, you know, we have seen some, you know, supportive policies from city to city, but that has not been very helpful in terms of, you know, changing the broader property sales. And also, and I think traders not too enthusiastic about the readout we just got about China's first Politburo readout, which is largely, you know, reaffirming the existing economic policies. So I think the sentiment is likely to be still very weak today.
Yeah, well, what happened? It wasn't that long ago that we got news of a potential $278 billion package to put a floor under prices, and now the selling swiftly resumed. What more are we expecting we might hear?
Yeah, so we're seeing that Chinese stocks actually just wiped up all the gains we got since last week when we had, when we heard from government voting for more forceful measures. I think what's the bigger picture is that if the policies came, too little and too slow, it's unlikely to help repair what has been happening on the stock side. Given now we're seeing CSI 300, having an unprecedented 6 consecutive months of decline, and until I think the big meetings come up, the two sessions in March will likely be, just in this policy vacuum stage for a little bit, and that's not good for investor sentiment.
Yeah, regulatory uncertainty is a key reason that foreigners have continued selling, and that's now gone on for 6 straight months.
Yes.
Is there anything, we talk a lot about valuations, but is there anything that could tempt them back in at this stage, do you think?
It's looking harder and harder because the valuation star, people have been talking about that for a very long time. But you have seen, for those who have been betting it's bottoming out, who have come in earlier, in the recent months, they've been burned very heavily. And what's also new, I think, is about this geopolitical risk becoming another pressure point because, from Wuxi Bio and PDD and Minnesota, you're seeing that it's not just about, what China's doing. It's also about lawmakers in the U.S. and also what Trump might be doing. So that's a lot of uncertainty there.
All right, Asia Equities reporter Charlotte Yang there in Hong Kong. And of course, in a little under an hour's time, we're going to be getting Taishin PMI numbers out of China as well for the month of January. Here's some stock to watch, though, when we do get going in Hong Kong and China. China's Anta, of course, after Amer Sports is said to have raised $1.3 billion in its U.S. initial public offering. That's priced below a marketed range. Other Hong Kong-listed athletic gear and apparel makers also in focus after Adidas and H&M's earnings disappointed investors. Annabelle.
Yeah, Paul, just taking a look at what we're seeing in futures so far for that setup for China today, we are just looking fairly flat, really, so perhaps that wait-and-see mode ahead of the private PMI numbers that are set to be released. Otherwise, we're actually seeing Taiwan stocks looking for a better session. Today, we had that pickup in PMI coming through. We're seeing better chip exporting numbers coming through from Korea as well. So those Taiwan-Korea markets pretty heavily correlated, and we're seeing the Kospi today in positive territory. S&P 500 futures, likewise, they're starting to pick up a little bit. It was the worst Fed day we have seen for US stocks going back to March of last year, but Jay Powell really pushing back on those market expectations for a Fed rate cut by March of this year. They saying it is not the most likely case, but of course a lot more data between now and that key meeting. That's it from Daybreak Asia. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. Stand by for Bloomberg Markets China Open.